No Taxfit. Taxfit. Tom get up fait tax déjà. Non me ka relax déjà. Taxfit.
Let me tell you about that day. It was a rainy day, and this is the day that my car chose to break down on me. I just had arrived at the convenience store next to my house. So the owner of the convenience store was nice enough to let me sit in the AC inside of the store. I called AAA, but they already told me that day they were really packed because I don't know if it was National Car Broke Down Day, but they had a lot of work on their hands. So they said, Miss, it's gonna be at least 2 hours, 2 hours and a half. So while I was sitting in the store, there's something that I've noticed. There was two types of people walking in and out of that convenience store. Most of them, they'll come and they buy a pack of gum. Some of them, they wanted the full tank gas. They were buying milk, products to go back to their house. And you know how the word convenience store is for not so convenient prices. So I was sitting down and watching the owner of the store, and I saw how when someone came and had a full tank of gas, buy a bunch of product, he had another type of attitude with those type of people because of course the purchase was more. But what he didn't really see from where I was sitting is there was way more people coming in just to buy a pack of gum. So I wish he would have understood that those pack of gum buyers, they were at the end by adding together, putting more money in his pocket than those people buying a lot of stuff. That really stayed with me. I am Karoll-Ann Fanfan, the owner of Taxfit LLC. And when I opened my office, this lesson stayed in my heart. That's why here at Taxfit, we do everything possible to make the client feel at home, comfortable. When I do a tax, it's like I was doing the taxes for my own family. Because without customers, there is no business. And without customer service, there is no customers. Thank you so much for being here today. Welcome to TTT, which is Tax Talk with Taxfit. Today we're going to talk about income. TTT is to bring the information to you because my dad always told me knowledge is power. So I want to share the knowledge because people always think that taxes is complicated, right? Let me tell you, there is an uncomplicated way that you can view it, and this is my job to bring that to you. So let's talk about income. Let's start by a lovely lady named Rose, okay? So Rose came to me a couple of years ago and she said, I don't know if you can help me. I'm going through some stuff with my taxes. I was like, okay, what's going on? Let me see, what can I do? And she was like, you know, I got married young. And after 3 kids back to back, my husband and I, we realized that it cost us more money to put the kids with the babysitter or to school than me staying home and being a housewife. So that's how I spent a lot of time not working, my husband being the breadwinner. Unfortunately, he passed away. And that year he passed away, I was like, I don't know what to do for the taxes because I was not really working. So I started asking here and there. People give me advice, what I should do because I need money. I'm not working. That means I cannot even get the refund for my children. So she went to that next door tax preparer that was doing it in the kitchen of his house. And then he said, listen, I can help you, okay? I have someone that doesn't have any kids. If you put the kids on their taxes, the problem is they're going to split the money with you. So she told me she was excited. She really needed the money. That was God sent, blah, blah, blah. So come to April, which is the end of tax season, still no money. She was trying to be patient. She knows that maybe the people don't have the same situation as her. She was patiently waiting. So the last day, she went to that guy and she said, what's going on? What's going on with the money? I don't have any money. You're not giving me anything. When can I expect my money? So he tried to avoid her a couple times. She had to call 10 times before he answered his phone. At the end, she realized that, listen, maybe that dude is not going to give me my money. So she confronted him. She said, what's going on? It's like, you know what? The deal didn't go well. Point blank, you're not getting anything. She was furious. So she asked her, well, where can she write to the IRS? What can she do? Do they have a local store here where she can go? Because, you know, she was in a bad situation and she felt like he took advantage of her. She got a friend that told her the truth. She said, Rose, you can't do nothing. Because what you did was kind of illegal. What are you gonna do? What are you gonna say? That they stole your kids' information? The IRS is going to point the finger at you. That's when she came to me, like she was devastated. And as I was listening to her and stuff, I'm like, but why exactly did you give the kids to somebody else? And she's like, because I have no income. Sometimes I did hair at my house. I know how to braid, but I don't have a 9-to-5. I don't work 9-to-5. So I needed income when I went to the tax preparer. He said, I need income to get a refund for my kids. And this is how, guys, I tell you, knowledge is power. Because I told her, Rose, do you know this is income even if it's cash only? You could have done your taxes with this cash that you get for braiding hairs at your house. She was like, what? I didn't know that. So that's exactly why, guys, TTT, tax talk with Taxfit. I don't want you to be a Rose. I want you to know about taxes so when you're in a situation, you know what to do. All right, let's talk about income. I know that a lot of people view income as my W-2. There is way more than W-2 income. And today, that's what we are going to talk about. Okay, so let's start with W-2 since it's what everybody knows. A W-2 is when you work for someone or an entity for certain time of hours and they take taxes from your wages, okay? That's the most common type of income. So at the end of the year, they give you a W-2 that will say the total of the income that you made for the year and how much they tax you, how much they took on you from federal tax return. People always have some question about that type of income. How much should I put as deduction, right? My clients call me all the time. Let me tell you something. What you need to understand is not really how much deduction you should put. So the deduction is your employer make you fill what they call a W-4 form, okay, when you just start a job. And you can change it as often as you want. But be careful because when you tell your employer, like put 2 deduction, that means they know that you are going to get that tax back. For example, someone that have 2 kids, right? When I do the taxes, if the employer had collected the full tax on the income, when she comes, they would give her money back for 2 kids. So what the IRS is telling you, instead of having that money back during taxes, why don't you just get it all along? Maybe that will help you have a bigger paycheck. But in the past, people really abuse that because they will put 5, 6 deduction and at some point they will not pay federal tax at all. When it comes tax season, they were shocked that they owe the IRS instead of making a refund. The IRS caught up with that though. So what they do right now, they do not ask you 1 or 2 deduction. They just ask you if you have 1 or 2 kids, whatever amount of kids, that you have under 16 years old, they give you a set amount that you multiply the number of kids by that amount that's set. You don't get to choose anymore. Because a lot of people spend a year paying zero deduction and then they are shocked when they owe the IRS. So that was the most common income. Other income that you can have, commission. Some people work on commission, like real estate agent, okay? Or now, people who work on commission are so common, like people driving Uber, people doing Instacart, people sometimes they do home inspection. So on commissions mean that you are an independent contractor. Your employer is not going to take taxes on you. It's going to be your responsibility to pay taxes at the end of the year on the total income that you got. I know a lot of people really get the first time, let's say if they were on W-2 and they're going to transition to 1099, they freak out because they're like, Karoll-Ann, what should I save to pay the taxes at the end of the year? I'm afraid, I don't know, I never had to do that. I want to tell you, relax, okay? This is how it works. You do not, when you work on commission or you're a 1099 person that receive money that didn't take tax on, they're not gonna tax you on the whole money. Keep in mind that you will be taxed only after you deduct all your expenses. You only tax on your benefit. For example, I love giving example because that just makes you get everything 1, 2, 3. If you're an Uber driver, right? You drive Uber for $50,000 for the year, but you use your car to do that job, right? So you have car payment, car insurance, the tolls that you pay. Some Uber driver, they do Uber locks. So they buy those nice little bottle of water to offer the client when they get into the car. And there's a whole list that Uber itself help you stay on top of. So at the end of the day, you do not pay taxes on the whole 50,000. Let's say you spend 30,000. So you're only going to pay taxes on 20,000. So breathe in, breathe out. Okay, you only pay taxes on the benefit when you're a 1099 earner, right? That's great news. So next income that you have, rental income. A lot of people do not think when they put their property for rent. I know that they're paying you cash money and maybe nobody knows, but it is income. It is income. And nowadays, with that boom of Airbnb, I hope that you keep everything. I would have another sit down with you when I go into what you can keep, how you can stay organized. But I just wanted to tell you that your rental income is income. Okay? All right. We also have alimony for divorce decrees finalized before 2009. Yes, it is taxable income. Royalty payment. I know a lot of musicians, and then they produce the song one time, and during their whole sweet life, they're getting a royalty check every time that song's played. This is income, okay? Not only the first year you got it, but all the little year that you got it after, it is income. Stock. Nowadays, everybody have the access to invest in stocks so easy. The other day, I even saw some that you can invest on WhatsApp. I don't know. At every corner on the social media, you can invest in stock. Reminder, this is income. So when you take that money out, it is income. What's interesting though that I want you to keep in mind, if you have a loss in there also, it is something that you can report in your taxes. So my best advice to you, I don't mean to toot my own horn, but have a tax preparer like me, where if you're unsure with something, you just call, okay? You make a friendly call to your tax preparer and say, listen, I invested in stock. So what is that? Is that income? Do I put it in my taxes? What paperwork that I'm supposed to look for? Because a lot of those things like stocks, PayPal, a lot of those, you have to go look for that paper for the tax. They don't send it in the mail to you. They don't email it. So you can totally miss it. And let me tell you something. The IRS And I know if an IRS agent is watching that, they hate me for that. But guys, this is true, okay? They love to wait 3-4 years after you miss something to come back to you to say, so-and-so, you missed putting your stock income in your taxes. You owe me this and this plus interest, okay? So don't let that happen to you. Have a tax preparer that you can call. Disability retirement payment, okay? Sickness or injury payment. There's a lot of people sometimes in their job, you have disability, for example, when you get pregnant. It is income. I know that you feel like maybe this is something that I paid before that they saved for me. You're going to have to put it in your taxes. Actually, if you're in a W-2 job, they will give you a W-2 for the sickness payment. Money and income offshore account. This is a sit down on its own. We're not going to get into that. We not. Okay? Now, the last but not least, the remaining amount of a debt or loan that is canceled or forgiven. This last part, I want to explain to you a little bit because a lot of people do not understand it. So for example, if you bought a car and you finance it for $30,000, and at some point after 2-3 years, something happened in your life and you can no longer pay the monthly payment. And the owner of the loan tells you, you know what? You paid off $10,000. It's okay. You don't need to pay the rest. The $20,000, I'm just going to cancel that debt for you. Or a credit card. That $20,000 that they cancel for you, I know that it looks like they cancel it, but it is income to you. Because the way that the IRS view it is, at the beginning, when you needed $30,000 to buy the car, they gave you that $30,000. I know you never touch it, but they gave it to you. So if the owner of the debt, of the loan, is saying you don't need to repay back, it's like they give you a gift of income. Be very, very, very careful with this one, because I had someone who came to my office and 1 year he wanted to fix his credit and he canceled, he negotiated with the credit card, right? So let me say, if I make one lump sum payment, can you let me pay $5,000 instead of $30,000? But guess what? After that, he had negotiated with everybody, he had $100,000 of cancellation debt. And that was income on his taxes. So I'm happy that you can understand this one because this is a good one. What is important also about income for us to finish this segment is you have non-taxable income. So just the other day, I had a client that called me and she was going to receive an inheritance. And she was kind of panicking because that's the first time in her life she was receiving an inheritance. And she's like, it's kind of big. Are they going to charge me on it? Do I have to pay taxes? What should I do? So I'm happy to tell you that inheritance and gift are not taxable. Okay, so this is not taxable income, inheritance. She was so relieved to learn that. Child support payment, okay, is non-taxable income for you, the person that's paying the child support. That means you can deduct it in your taxes too. I'm sorry. Alimony payment, money that is reimbursed from qualifying adoption, okay, that's not taxable income. Welfare payment. And this is it, guys. Income in a nutshell. So I was so happy to be with you today in this sit down of TTT, Tax Talk with Taxfit, your girl Karoll-Ann. Taxfit, you can call us at 754-423-4234 or Google us. Taxfit, one word. We'll have 2 pages of Google reviews coming up. We're on all social media, Facebook, TikTok. Let me tell you, I love social media, okay? So thank you so much and see you at the next TTT.